Hi, everyone. This is Arry, Chair of the Cascadia Blockchain Council, and also your host for the Blockchain Underground. Really glad you're able to join us. And even if you're just watching this recording, that's really, really great. We're here to just support you and give you as much information as we can for the stuff that you care about. So this episode is really, really interesting because we had the SME team, the subject matter expert team from the TaxBit team. And so we had Michelle O'Connor, the Chief Marketing Officer, and then we had Aaron Fenimore and Aaron Jacobs from their SME team join us to answer all the questions that the community could think about around crypto taxes. So it was really interesting. We got to hear about their funding strategy, how they grew out of consumer. It was just really interesting to see how they've grown. I mean, they just landed a $130 million funding round, which makes them like a giant unicorn, in fact, with their HQ2 here in Seattle, Washington. They answered questions on liquidity pools, Solana transactions, wrap tokens, the jurisdictions of the SEC versus the CFTC. And actually, TaxBit is one of the only companies, I think it's the only company that's actually working in partnership with the IRS. So they have a very, very good working relationship with the IRS, which gives them a lot of insights into what the tax guys are looking for. So don't want to miss this. I definitely learned a lot. Hope you do too. Don't forget, we have an AMA every Friday from 12 to 1 p.m. You can sign up or RSVP with the Blockchain Underground on Meetup. And I hope you'll let us know if there's anything that we can do to help and send us feedback. Follow me. I'm Arry in Seattle at Twitter. You can look me up or ping me anytime. And don't forget to rate, review, subscribe, and share. Thank you. Bye. All right, welcome everybody. Today we're talking with the TaxBit team. We have Michelle, Aaron with an A, and Aaron with an E from the TaxBit team here with us to answer all of our crypto tax questions and more. They're a very well-established and funded startup in the community. They just moved to Seattle as their second headquarters. So I'm going to hand the microphone over to first Michelle, who's the CMO at TaxBit, to give a quick intro of herself, and then hand the mic over to Aaron or Aaron for their intro of themselves. You know, we'd love to know, like, you know, what is TaxBit, and then an overview of like how you got into crypto.
Sure. So I'm the VP of Marketing at TaxBit. I've been there since January of this year, but have kind of an interesting path to joining the company. I was their first consumer customer back in 2017. So have been in crypto since 2014. I worked at a digital wallet prior to that called Uphold that was BitReserve when I started. Have really watched this industry grow and evolve, which is exciting. And also just really seeing the way that things have changed and seeing NFTs and things like that. It's just so cool to see back when it was kind of nascent in 2014, 2015 and had some negative connotation. And now it's, you know, on mainstream every day and people are doing it. I am really passionate about building out our community and helping educate people and empower them to make decisions year round. So they look at TaxBit as a source of information, not just a year-end tax tool. And we have some really cool features and functionality that we've built out that I like to say have gamified taxes through tax loss harvesting and things like that. Skipping Aaron Fenimore, going to Aaron Jacobs, and back to Aaron Fenimore.
All right. Let's do it. Nice to meet everybody. I'm Aaron Jacob. I am our head of ERP at TaxBit. This is our accounting suite product. So we'll talk a little bit about that today. I'm a CPA that has focused more on the accounting side for the majority of my career and have spent a lot of time in traditional financial markets. I've been with TaxBit for about 4 months now. And prior to that, I spent about 8 years working in the derivatives markets, working for a company that executed about $2 billion a day in derivative notional, working on our SaaS technology, our accounting subledger technology, building out capabilities across asset classes, including equities and currencies, interest rates, credit, et cetera, and working with a lot of large institutional investors and large corporate clients. We're building some amazing things at TaxBit, and the solutions are resonating in the market that help companies be more efficient in their operations, help them check the accuracy box, help them check the timeliness box, and also just help you sleep well at night, so you know that you're on sound footing. In a prior life, I also worked at the Financial Accounting Standards Board, which is a non-governmental, not-for-profit organization that is granted authority from the SEC to set accounting standards for all publicly traded companies. And there are some really interesting things as we march forward in the digital asset space in the accounting world, where there is not tailored guidance that exists today for this asset class. So one of the big needs in the industry is to have more form-fitting guidance that can enable, companies to represent a little bit better the economic realities of what digital assets are becoming and their activities in that space. And we'll look forward to talking more about that, as we go forward here. So excited to be here with everybody.
Thank you, Aaron. Is Aaron F. back online? Let's see.
Yep, I'm here. Hi, everyone. Sorry, I had to drop my video. My internet isn't strong enough right now, but I'm really excited to be here with everyone. We obviously like to diversify our names a lot. I am the other Aaron in the tax group here at TaxBit, and I focus specifically on information reporting. So specifically, how are certain payments treated for purposes of income and reporting ultimately? Think 1099s in this world of cryptocurrency. And my background is a little bit different than most people in information reporting. I have a legal background, transitioned into technology, specifically tax technology, just like we're doing here at TaxBit. But this is my first foray into digital assets, and it's extremely exciting. I mean, I don't know if you know, 1099s are not the most exciting things, but when you mix it with this burgeoning class of digital assets and all of the different new scenarios of what could trigger certain types of income events, it's really exciting. And we have a really awesome team here, and we're working in an area where we don't have legislation yet. So we're really kind of forging the way and the path for how things should be treated and how we can react in terms of technology answers for the industry. So I'm very excited to be here.
Awesome. Well, thank you so much, Michelle, Aaron, and Aaron from the TaxBit team for joining us and being available to answer all of our crypto tax questions. Does anybody from the community want to step up and ask a question to start off with? Otherwise, I'll just jump in.
Who's your target market? Who are you targeting with TaxBit? Is it the individual, or is it exclusively like an investment syndicate, or who do you go to market with?
That's a great question. I'm happy to take a stab. Or Michelle, do you want to have the first? I'll take it. Okay. So when you think about TaxBit, let me just maybe give a little bit of the TaxBit story. Our founders, these are two brothers. One's a CPA, one's an attorney, and they recognized really early on that there was, if this asset class was going to survive, that there needed to be infrastructure around it that would support tax and accounting for it. And I think they realized very early on, doing their own personal taxes, that it was a pain in the neck. It's very difficult. The data is complicated. It's can be very high volume. It's disaggregated, a little bit messy. And putting it all together in a way where you can report was not very easy. So they started building out software that could automate a lot of these processes. and could do these calculations much quicker than any of us could in an Excel format or any other type of spreadsheet. And they made an important realization early on. One of our CEO, founder Austin, he was a controller at a company out of Utah called Qualtrics, which was a high growth SaaS company that made a decision to go upstream to enterprise really quickly. And TaxBit grew out of the consumer market, right? Providing consumers and people like you and me insights into taxes and how cryptocurrencies are taxed and being able to streamline those processes. But from there, expanded to be able to support information reporting, 1099 reporting at the enterprise level. These were exchanges early on. And then, as many of you probably know, the government kind of came knocking and was interested in the technology and how we were performing these calculations. And so we were fortunate enough to win a deal with the IRS and are privileged to work with them on a very regular basis now. And then one other thing that we realized as we started working more and more with these large exchanges, they said, you know what? Not only is there a tax challenge, but there's also an accounting challenge. So can you help us out with our accounting for digital assets on our own books? So Nick, it's a really good question. And I'd say there are 4 product verticals to maybe directly answer that question. The first is the consumer. You know, we have a consumer product, and hopefully everybody on the call is familiar with that. If you're not, then, you know, would love to share more about that. But the consumer product vertical is first, and then we have a government vertical. We have an enterprise tax vertical, and then the fourth and final is an enterprise accounting vertical. So we've really grown in, you know, the audience that the products are resonating. The beautiful thing is it's all built upon the same architecture and infrastructure that enables you to have consistency across the board for calculations, which really helps everybody sleep well at night, knowing that, hey, how the IRS is thinking about things is consistent with how I'm doing things, which is consistent with how my exchange is thinking about things.
That's fantastic. If I could ask, have somebody please reach out to me.
Definitely.
And I'll leave it at that. I'll let your imagination do the walking.
Nick, if you want, email me, michelle@taxbit.com, and we can figure out a little bit more of what, who, and where to connect you with.
Okay.
And then Aaron, you did an amazing job. I, as a marketing lead, am so proud of your thought leadership right now. I'll just take a couple more points on what he had is, as he said, we started in a consumer product and have built a really strong relationship across the crypto community. Navigating taxes, as a lot of you know, is not the most popular topic in the crypto industry. It has become more understood. I wouldn't say more popular per se, but what we're really doing is we're all folks who've been in crypto for years who believe in the necessary use, adoption, and want it to go mainstream. So we're working to really bridge some of those legacy, either institutions, regulatory bodies, et cetera, and help inform them of these emerging areas of crypto, as well as the traditional areas of crypto that have been there for a while. So our team is really working not only to have products to facilitate to what Aaron mentioned, but behind the scenes, we're very active in informed conversation and bridging the knowledge gap.
Oh, that's brilliant. And just to add to it, I think that is going to be the critical fulcrum that brings crypto into the mainstream and it really starts to do some real transformative work. I couldn't agree more. And my own research has verified the same. So it's good to see that there's other entities out there that have a similar mission and view. Very compelling.
Awesome.
Cool. Great question. Anybody else? Otherwise, go ahead.
Hi. Sorry, I have a question. So with information reporting, I feel like a lot of the times the problem you're trying to mitigate is like the garbage in, garbage out problem. Could you talk a little bit about the process that you go through for getting the right information from the consumer, for making sure that they're, you know, reporting accurately, not just reporting?
Yeah, I can speak to that. And you completely nailed it on the head. And this is a conversation I have constantly with all my clients. You know, before we even get to information reporting, we have to look at what the underlying information structure looks like, right? Because like you said, garbage in is garbage out. And I think this is to kind of build upon the previous question too. This is where our tools really shine because they're an overall platform. A lot of the information reporting tools that are out there are very segmented. They rely upon the assumption that you have good data. So as an entity, I have one system collecting all my data, one process stream. And as we all know, that is highly unlikely. You know, it's very fractionalized institutionally. Different departments are collecting different information. Different departments are holding that information in different systems. And so our system is really a platform. So you think about it in terms of the static data. We work with clients first and foremost to clean all of their static data up and map it to how it should be mapped for information reporting purposes. And through this mapping exercise, we really clean the data up. We actually re-architecture their whole entire onboarding process and how they collect data, how they verify data. And then you get in the transactional nature of all this cryptocurrency transactional data. And that's where our tools really shine because they're actually consuming it and running the transactions. And when there are mismatches, you know, it highlights that flag, red flags it, you know, and so we're constantly cleaning up the data. So the end process is a clean product for information reporting purposes.
Great, thank you. That was very helpful.
Yeah.
I have a question more on the competitive analysis side and comparing different offerings out there.
Yeah, just what other offerings are out there similar to TaxBit? Is that what you're asking?
Oh, so my specific question is when looking at kind of some of the guides that are out there, there's a lot of wealth of information and some of them like specifically for wrap tokens or staking and liquidity pools tends to be more aggressive, some is more conservative. What recommendations would some of you recommend to like a consumer in comparing where to fall on that spectrum in aggressive versus conservative strategy since there isn't?
I can share some blog posts with you on what our team has landed. Traditionally, kind of company-wide, we don't give specific advice for a couple different reasons. One, we're not the CFPs, so we don't want to lead you astray, and we're not your financial planners. So we personally might have strategy or opinions, but I just don't want you to feel as if we give you something and it doesn't align with you are, and also that's just kind of not our world. But we do have both tax and legal guidance that I can share, so at least you know where the state of the union is, and then kind of make your own decision and feel empowered to at least know which way you go and have some reason behind it.
Yeah, I'd also just add to, you know, it's still gray. And so, you know, kind of reading the FAQs from the IRS that are already published specific to some of the topics you touched on in terms of staking and mining, and then just the draft infrastructure bill that, you know, is still going through the approval process. I think it highlights where we are going in terms of regulation.
So we have a question in the chat from Roger Hong. He said he started a hobby site for blockchain CSVs for Solana and Terra. It's called stake.tax. He's wondering how much support there is for liquidity pool transactions. Many users use these types of transactions in these types of ecosystems, and he's only beginning to see if he can support these in terms of CSV support.
I have to admit this is not my area completely, but we can always take that question back if you want to email us. We have a fabulous blockchain team, and she is actually extremely knowledgeable about the liquidity pools and all of the data details. So I'd be happy to ask her that for you and connect with you.
Sure. Roger Hong, please direct message Aaron Benamori. Anymore.
Yeah, it's just Aaron at taxbit.com. You'll either get me or the other Aaron, so you can't lose.
And this is Nick. I'm also interested in the liquidity pool question as well.
Okay. One thing that we will share is that, you know, we're hearing a lot of activity in the market. Like DeFi is taking off. You think of what has happened in even just the last quarter in the DeFi space. There's been, you know, there's like a new protocol that pops up every 2 hours. You know, it is really taking off, and so our team is reacting to that, and we're investing heavily in that area. So Nikki, the member of our team that Aaron was talking about, she heads up our DeFi team and our blockchain team that is laser focused on, you know, being able to prepare us to react accordingly so that we can support those types of transactions.
I just posted a blog post from Nikki that she published this week on DeFi, so that might have an overview as well.
Awesome. Thanks for sharing the link, Michelle. Anybody else from the community for questions? How much of the TaxBit employee team or just team overall owns crypto? Like, are you actually also participating in crypto as a company?
Yes. I can say that I personally have bought all different types of crypto. We make it a real focus to be informed and educated about everything going on, not just in crypto, but the digital space, the digital asset space. And I know we personally talk about, you know, what providers, what exchanges we're buying from. Nikki, who we mentioned before, has walked Aaron and I through the DeFi space and MetaMask wallets and how to create them and, you know, how to create NFTs. So I'd say we're really active because the more we know about the industry, the ins and outs, the more we can be better informed with our product development.
So for me personally, I first heard about the technology, you know, many years ago, like most did, and it took me a little while to get around to it. But I had a good friend. Sorry, there's a lot of feedback there. I wasn't sure if it was coming on my side or not. I had a good friend, this is back in 2017, who walked me through a few more things. So my first actual purchase in the crypto world was back in 2017, and have been watching it pretty closely ever since then. So yeah, I'd be surprised if our team is growing very, very quickly. I'll tell you that. But I'd be surprised if there's anybody on the team that doesn't have some personal exposure to, you know, the crypto world. And like Aaron said, we're always trying to become more and more crypto savvy and stay on top of the latest and greatest and what's going on. I actually sat down with another member of our team just the other day who had created her first NFT. And there were 2 NFTs. One was a picture and then one was a drawing she did of her cat. And so I'm in the process of purchasing her first NFT. So we try to support each other in those ways too.
And I tell you, people really appreciate it. It strikes of a lot of legitimacy when people actually own crypto and have a wallet and have at least gone through the transaction. And it's a very sharp distinction between that type of messaging and the unity between the communities that gets created from it versus some other ones that maybe just try to capitalize on blockchain as a buzzword, so to speak. So I really appreciate that, and also being forthcoming about it. It really means a lot to the community to hear it.
Well, thanks, Nick. Appreciate that. And like, you know, there's just no substitute for experience and doing it yourself. There's no better way to learn than to roll your sleeves up and get your hands dirty. So yeah, I agree with that. And I'm glad to hear the feedback. So thank you.
Here, to the community. Carlos writes, does TaxBit capture all transactions? Does it also capture Solana transactions? And it looks like Adam wrote, TaxBit tends to be more conservative. And then commentary on wrap tokens as taxable events, whereas other software providers discuss those events as transfers. Does anyone want to comment on that?
I'm happy to take the first the first answer on that one, and then, you know, Michelle and Aaron feel free to chime in. So first off, on Solana, the answer to that is it's coming. Yes, it's absolutely on our radar. You know, we have a a pretty long list now, actually, of places that we're running down on our roadmap and protocols that we want to support, and Solana is very high on that list. So you'll see more to come in the not too distant future. And then on the point about being conservative, and then we can talk a little bit about wrapped tokens. We're a company that was founded by a CPA. So if you know anything about CPAs, we tend to be, just conservative people to begin with. And maybe partly born out of the fact that when you see some of the potential punitive outcomes, it can be a little bit scary. And so we want to help our customers, whether those are, individual consumers or those are large enterprises, really be confident, operate in a high degree of assurance that they're on sound footing, which is why we back up, the numbers that we provide at the consumer level and our enterprise clients in the 1099 level. We want to have a high degree of confidence in our ability to support you and stand behind you. And I think the reception has been really positive on that as well, because there is such a thing as a statute of limitations with the IRS, which is nice that exists. But it is a fairly lengthy statute of limitations, and you don't want to live under the potential thumb of the IRS for a long period of time, if at all. And so, there are some areas that we tend to play it safe, but would echo Michelle's thoughts earlier around that. We're not your advisors. But we think that provides a lot of comfort to our clients in knowing that they rest on sound footing. On the wrapped token side of things, it's interesting, like to reiterate what Aaron said earlier, there's a lot of gray out there, and navigating the gray areas is not always an easy thing. And I'll tell you from our conversations with the IRS, one of our colleagues who's not on this call today, his name is Seth Wilkes. He's actually getting married today. So shout out to Seth getting married. He has some very good relationships at the IRS, is on calls with them on a very regular basis. And one of the things that they've shared is, look, if you're going from one blockchain to another blockchain, in their view, it's hard to argue that that's not a different token altogether, even though it may be, wrapped BTC or something like that. So you can get a sense for how that can interpret or how that can influence their interpretation of certain types of scenarios that you come across that are in that gray, because there isn't existing guidance for everything.
And there's significant legislation that's currently being considered and researched. There's a project by MIT Lincoln Labs that's looking for presidential, actually we're solicited for presidential advisory and congressional advisory on this particular subject. So it's an ever evolving as well. It's not something that's a one and done. It's likely to change in subsequent tax years.
It's a great point, Nick.
Michelle or Aaron F., do you want to comment on that question, or?
Yeah, I left a comment in the thread, but I think for us, we want to make sure that anyone that's our consumer customer or enterprise customer doesn't end up having issues, as Aaron said. So not only are we taking into consideration a more strategic approach, it's conservative, but thoughtfully conservative, in that we are the official partners of the IRS. So we know their opinion, and we don't want our customers to come through audits years later. So we're just really following the way that things stand now, and don't want to put you in a potential risk later.
Yeah, I would just echo what Michelle and Aaron have said. Having done IRS audit examinations, they can be extremely, extremely difficult. And, what seemingly one simple transaction, one reportable event, I mean, you would be surprised at the ultimate fees and penalties that some of the enterprise institutions that I've worked for before. So, I think in this gray area, erring on a side of caution is, a step to take initially, and hopefully we'll have guidance. But as someone commented, I don't even think we know what we don't know right now. Like, this is an ever evolving area. So there's going to be changes and fluctuations for years to come.
Thank you for sharing that question and answer. Hey, TP, want to ask your question?
Yeah, thanks. So you already have sort of answered it, but I was just wondering, it seems like the more people are coming forward to the regulatory agencies, they sort of get exposed a little bit. And then I'll just say, like, especially with the SEC, it seems like, being forthcoming sort of seems like it could be a trap, right? Has from your experience working with the IRS, have they been pretty open to working with taxpayers and trying to figure this out, taking a little bit of a different approach than like the CFTC or the SEC just fighting over jurisdiction? Can you comment a little bit on like what your experience has been?
Yeah, I can comment, especially like taking this outside of the crypto space and just looking at like traditional, there's a whole program for voluntary disclosures for these type of underreporting events or, various issues, but there is a whole group that deals with voluntary disclosure. There's a whole process that you follow. So I don't see why the IRS would position this any differently, especially in terms of the ultimate information reporting and associated penalties. And I think there is an element where they respect the fact that you don't wait for them to find it. I can't say I've seen the voluntary disclosure specifically in the crypto space because it is so new and there are not finalized regs, but I do expect that this voluntary disclosure program will continue to spread into that area.
Would it be a fair statement to say that the voluntary disclosure process might be less acrimonious than perhaps they finding it, and then it's more of an audit type of environment?
You're exactly right.
Okay.
I think there's much more of an open back and forth dialogue in the voluntary disclosure programs that I've worked with instead of comparatively when I'm responding to an actual audit. It's just a different tone.
Interesting.
And then TP, I'll just add on your comment with the SEC and the CFTC. I agree with you. I think it's very interesting to kind of watch the back and forth there to see who has jurisdiction. You have the CFTC that obviously, oversees commodities, futures, derivatives markets essentially, and the SEC that plays a critical role in investor protections. And it's going to be interesting to continue to see how that plays out. I think it's more clear in the accounting world, particularly publicly traded companies and how those are regulated. But this is going to be an interesting space to continue to watch as it evolves.
Thank you. Looks like TP that answered his question. Let's move on to James Way. James, question?
Yeah, hi. So I've got actually two questions. The first question is, so do you guys have any sort of guidance or I guess like best practices for smart contract devs when it comes to how to, I guess like a lot of these DeFi transactions, we can implement them a number of ways, and some ways might be more tax efficient, for example, right? Like wrapping, some stuff we can't really do change. Like wrapping, you're gonna have to wrap your ether into wrapped ether. There's no, like, if you want to be able to pull from the contract, but things like a lot of, we can put some proxy contracts, right, and turn like some of those transactions into internal transactions, because like a lot of times when you swap on Uniswap, you're going from DAI to USDC. There's actually an intermediate, like you're going from DAI to Ether and then Ether to USDC. So those internal transactions may not be reported, or like you may not even be aware of them, right? So we can wrap those transactions into internal transactions, right? And so is there any sort of, that's like kind of my first question. And the second question is, do we have any like documented kind of court cases, or any of this stuff has been challenged kind of in court, and do we have any like precedents when it comes to how to deal with these things? But thanks a lot for answering.
Hey, on your first question, James, the best advice I have, if you're a blockchain developer, is talk to our recruiting team, We'd love to get to know you better. There's obviously so much to do there. So yeah, that, it's interesting. Again, there's a lot of gray. There aren't hard and fast rules in that space, and there are different ways to interpret that. Is each one of those phases in the process, is that a taxable event? A strict read of what exists today could suggest yes. Could you also take a step back and say, yeah, but come on, like, here's what we're really doing. So do you have a leg to stand on there? Well, the answer is yes, so that is going to continue to evolve. And for us or anyone else to say, here's like a hard and fast rule to follow, they'd just be pulling your leg. So we won't do that here. But just say that what we're hearing so far from the IRS is they do seem to be taking an approach where if you're changing, if you go from one blockchain to another, that they view that as a different token, and therefore to get from X to Y, you'd encounter a sale event or a trade event or something that could be considered a taxable event. So.
And I think that's where education on both sides is going to be critically important, because there are two ways of looking at the same problem. And one is, what's the pragmatic taxable, exchange of value for goods that are occurring. But then there's the mechanics of how do I get the information from point A to point B so that the transaction can actually occur. I think there's too much ambiguity there. And I think that it would be extremely beneficial for policymakers to understand the specific mechanics by which it's exchanged prior to trying to apply the traditional exchange mechanisms that we have today. Because by the very nature of the design and the very nature of the technology, it's supposed to be different, because it doesn't represent the exchange of anything physical. So, if we're going to treat it like something physical, we're going to come up with a whole number of edge cases that create more confusion and more conflict. I think, that's my participation here is, can we have dialogues across the aisle, across the table for traditional, non-traditional ways of doing this, and arrive at something which is foundational and moves everybody's interests forward. And I think there's a story to tell there. I think whoever figures that out has something really special.
Yeah, just say amen to that, Nick. I think that's a really insightful comment. I think it's interesting that, in some of the things that you do in the DeFi space, you don't necessarily see or even action all of those changes and paths that it could follow, right? And so to be held in some ways accountable for the activity that you don't always have insight or control over, it doesn't necessarily feel quite right there. One of the things that we enjoy doing, one of the reasons we love hopping on these types of conversations, is to hear from everybody what you're thinking, what folks are struggling with, what they're wondering about. Because one of the unique positions that we're in is to just have had established some of these reputations and relationships with the IRS and with Treasury and folks who are in the room setting meaningful policy. And one of our goals is always to be an accurate reflection and, maintaining the integrity of what the industry is saying and needing in those conversations. So that's, amen to that, Nick, and we'll do our very best to continue to be good and stewards and advocates for the industry.
I have a quick question on that. Like here in Washington State, we've been building relationships with the DFI, which is the Department of Financial Institutions, and have progressed the relationship. So they've been having open town halls with the community and just giving updates. Do you think TaxBit and the IRS could do something like that, where we could have more of a community, accessible event around that, or thoughts?
I'm curious if Aaron Fenimore has any thoughts on that.
Can you say that one more time? Sorry, you broke up a little bit.
Yeah, no problem. I mean, it seems like the relationship between TaxBit and the IRS has really gone well. And just taking my experience working with the Washington DFI and our progressing the relationship, we recently hosted a town hall with the DFI, and the community had opportunity to access the DFI and ask questions, and it was just a really great experience overall. Do you think TaxBit help kind of give access to the community to the IRS, and we can have more of that, two-way street?
Yeah, I mean, that's always a tough one with the IRS. It's really not an institution that I find welcomes that interaction. I do have to say this. They sit on a lot of panels for public conferences. Obviously anyone can attend. And they are always more willing to come out in kind of the public forum for Q&A type scenarios and settings when you're partnered with nonprofits. And so in my experience, like when I've been in conferences with them and opportunities to speak with them, it's always in like that conference setting, with educational institutions, various nonprofit tax. So I would think they would be more willing in that setting, but like a one-on-one, it's just tough. I have never seen it before. And I think it would be extremely beneficial. So, people understand where they're coming from, since so much of what we know is through, oral conversations. Very, very little is actually written, it's not clear. So, it puts us in a really tough position from the consumer and enterprise situation.
Well,
and it's really tough on the behalf of, sorry.
Oh, I was just going to say, in the name of building more public and private partnerships and relationships, if there's a way, like if TaxBit could help, create that scenario where we could create that experience for the public and the community, especially in this, evolving space right now. I think it would help.
I 100% agree with you. I have, there's a big conference on the East Coast that I go to where they partner with this nonprofit, and I have been making it my personal mission to try and bring that to the West Coast. And every time I talk to the particular connections I have at the IRS, it's, where we would totally be open to that. We need to find a nonprofit that actually hosts it, because they basically can't be viewed as partnering with private entities to show like any favoritism. Basically, that's the long and the short of it. So if we can work together to find that, kind of three-way relationship, I would 100% be in favor of spearheading that.
Well, right here, we have the Washington Technology Industry Association. It's the largest tech association in the United States, representing over 1,100 tech companies. And we are the nonprofit here that's, we're hosting this as well. So
yeah, I think we should talk.
Awesome.
I mean, with CES connections and, the connection to the tech nonprofit, I would hope we could eventually get something put together where there is a better forum specific to crypto too.
Yeah.
Other conferences are extremely broad, so I don't know how helpful they would be.
Cool. Well, thank you for letting me say that. Nick, did you want to add commentary to that?
I was going to say, yes, you're absolutely on the money, and there's a different way that you engage with any kind of a public entity, which is different than if you're used to going to market and, you're going after a private enterprise. So, but yeah, I've been in that space quite a bit myself. I've got a pretty deep network in. And I think that another thing that, and this is probably larger even than the community here, is that there needs to be presence in Washington, a lobbying presence through a nonprofit, so that they can be constantly in the ears of policymakers and lawmakers as to what the needs of the community are. And the better we're at that, the more life that the industry can have. And I think we're at that critical juncture where we're going to make it. It's going to happen, but it's going to take some careful steps. But I just wanted to say, yes, that's absolutely the way to do that if you want to get access to those individuals, and relationships are everything. And also just to hold highest the respect for their impropriety. If you can show respect to that, you get a lot more compliant if you can protect that part of them for them.
Yeah.
Yes, agree. Anybody have other questions, or we can loop back to Carlos had a double.
I had a question.
Okay, Adam. Yeah.
I was wondering about, let's say you take like the more conservative path and you file for any given year. What's the process like if, let's say, the IRS come back and they say, well, actually, we do accept the more aggressive path and you are owed money? What's the process like? I assume there's the tooling in TaxBit to go back and search for certain transactions, but more in terms of like a general process, how would that work with your taxes if you actually paid more money than you were supposed to?
So are you talking about your personal tax return, your 1040?
So your 8949 capital assets.
Okay, yeah,
for instance.
Yeah, so that translates to Schedule D on your 1040. So our tools are generating the 8949, which is just simply an attachment to Schedule D of your 1040. So while we would, of course, be able to work with you to amend potentially the 8949, that's really going to be triggered from the exchange as well, or other platforms. So it's going to be a multi kind of like entity and form amendment. But that's where our group could work with you. Like a lot of our subject matter experts could walk you through it, but it's really going to be amending your returns, just like you would. Like I always try and translate it outside of crypto because it's just a little bit more digestible. Think of it like with a traditional overpayment or error on your personal return where you actually did not owe as much money, so you're owed a refund. It would be similar to that process. It's just more difficult because of potentially the multi level and number of transactions, which would either be triggered by the 1099, which flow to your 8949. So it's just more complex.
Got it. Thanks.
Yeah.
Great. More questions from the community, just raise your hand and we'll call you up or pop it into the chat. Otherwise, Aaron or Michelle, do you have some general, I guess, overarching recommendations or suggestions on just overall tax approach for people to take? Track it diligently. I don't know. What would you say?
Well, one thing that I'd say is, you should be using a platform to help you do that, right? TaxBit's an obvious example of that. We hope you use us. We hope you love us. But you should be using something that will help you. But the other thing that I'd say is look, let me tell a quick story. My son broke his arm a couple of months ago, right? And we took him to the ER. He had to get his arm set. It wasn't set totally correctly. And so we had to take him back a couple of days later. He had to have it reset. And it was a little bit of a mess, and it's all past that now. So he's doing fine. But what's frustrating about an experience like that is you never know what the bill is going to be at the end of the day, right? I still don't know what the bill is going to be at the end of the day. And so, I get these things in the mail and it's like, okay, you owe this much, but then they haven't actually run it through the insurance the right way. So it goes back and forth and back and forth. And it's a total mess, and it's a pain in the neck not knowing where you stand. Taxes historically have been very much the same way, where you get to the end of the year and then you procrastinate for a couple of months until the last possible second, and then you hurry and try to rush something through before April 15th. And it's a pain in the neck, and you never really know what that number is going to be until you get right at the doorstep when you can't change anything. And so one of the things that Michelle alluded to earlier, one of the tools that we're putting in users' hands to empower them are things like tax optimization opportunities. You can be much more strategic about your tax planning than many of us often are. And this is an area that presents just really amazing opportunities to do just that. Michelle's putting some links there in the chat, so check them out. But there's some great opportunities to be strategic in how you go about your tax planning process. You might have holdings, and if you're not familiar with wash sale rules, they don't apply to crypto, which what that means is if you have holdings that are in a loss position, you can sell those holdings, immediately repurchase those holdings, and you can take the loss on your taxes. That's not under the table. That's not nefarious. That's something that's very much available. The IRS knows about that. It's something that's on the table in at least the House infrastructure bill to remove that. So it's not something that you need to feel like that is in the gray. It's not. But there are some opportunities where you can be very strategic about tax planning throughout the year, so that unlike me with my son's broken arm, waiting for bills to come in, knowing I'm going to have to pay them, but having no ability to influence them, you can actually put yourself in a much better situation where, you know, you can know ahead of time what that's going to be, either in your favor or taxes that you'll owe, and plan accordingly for it. So that would be my main point of advice is, you know, be a little bit more strategic. There are tools that exist today to help you do that, to recommend trades. Our platform is an example of that, that can just help you in your tax planning and put you in a much better position. You'll be grateful that you did it come April 15th next year.
Oh, that was really great. Thank you, Aaron. I just remembered a question from someone recently today about staking. Can you provide some overview guidelines around staking, and how does taxes happen around staking?
Yeah, I can speak to that. So this is one area that isn't gray. In the FAQs, the crypto FAQs that were released, I forget the specific number, but it's in that article, Michelle, that I believe we published. I think I referenced the specific FAQ. The IRS did say that it would be appropriate to treat staking as income, and it would be considered other income. So if you're staking with certain platforms like Coinbase or Gemini, you should expect to receive a 1099 MISC at the end of the year. Well, I shouldn't say the end of the year. You should expect to receive it shortly after the end of the year.
Great, and thank you. Michelle just shared the link on that, and we got hand raises right up for that. So Adam, I think Adam was first, and then we'll go to Fang Ting.
Mm-hmm.
Thank you. Yeah, in regards to just following up on staking, so is there a difference between staking in like a liquidity pool, for instance, where you deposit it into a pool of funds and you earn an income from that liquidity pool, versus staking into a protocol directly? So for instance, like the Graph GRT, you just stake GRT token and you earn a percent based on that protocol. So there's a difference between liquidity pool staking and the protocol staking in terms of those deposit and withdrawal events.
Yeah, there is still, so this is the area of kind of grayness in terms of when the activities are happening on a DeFi platform. I would say conceptually they should be treated the same, but there's this argument of, well, how do we know who to report? If we're a DeFi platform and we're not necessarily doing KYC, we don't even necessarily know who we're paying these, you know, or who are allocating these funds for staking to. And so that's where I'm really hearing the industry feedback of, all right, conceptually we can understand it, but practically, how do we actually execute on this?
That makes sense. I think the biggest gray area that I've seen is in terms of capital assets and whether it's considered a transfer or capital asset sale between like the protocol versus a liquidity pool. Because I think some of the more conservative path would be to treat it as a capital asset sale going into a pool, versus where it's going into a protocol, then that seems closer to transfer. So I think that's another area too that it's good to examine.
Yeah.
Cool. Thank you. Bang Ting, what's your question?
Can you guys hear me?
Yes.
Awesome. I
Yep.
actually have a few, just to follow up on Adam's. So what about, I guess, is it treated differently for people who providing liquidity for protocols and receiving, governance tokens as a reward, as one form of rewards, and compared to the people who were providing liquidity through an aggregator? However, they don't receive, governance tokens as rewards directly, which were auto compounded into their initial investments. So are those two form of investments treated differently in terms of a tax?
So I think that I would need a few more details on the actual logistics of ultimately the DeFi is definitely an area where the analysis becomes so much more complex because it's just not a clear income event. It's not like you're clearly, receiving staking funds all the time. There's multi levels of the transaction is the way I view it. And so I would definitely have to look more into that to be able to opine on it.
Okay, with a quick example would be invest in or provide liquidity for Curve, if you know what Curve is, Curve.finance, and compare it to invest into Urn.finance. So you're providing the liquidity on the same pools, but through Urn you don't receive Curve as a rewards. In that case, whenever you claim it or you sell it, it considered as an income. The other way would be just accumulating capital, I guess.
Yeah. It's just accumulated earnings.
Okay. I don't know if anyone has asked this other question. So are free airdrops considered as gifts or income?
I personally can't say that I know the difference between the free airdrop and an airdrop, but I know airdrops are considered.
Okay.
Yeah.
It's in the tax guide that I shared.
Oh, okay.
Okay. So sorry, I missed a big chunk of the meeting.
No.
So airdrops are considered income, is that right?
Airdrops are specifically the other.
Okay, got you. A third question I have, sorry for all the questions. It's related to James's question. So for contributors to DeFi protocols who received a vesting schedule as compensation or as rewards in one way or the other, how would those be evaluated in terms of taxable income? Because in my opinion, the subjected to the liquidity there are for the specific rewarded tokens, and it's usually, pretty low compared to Bitcoin and Ethereum. So it would be considered, I would consider it's unfair to use the market price as the value for those tokens, because in a lot of cases, you really can't sell it, in one shot to. Anyway, I just thought if you guys have any ideas or opinions on that.
Yeah, so.
Yep, go ahead, Michelle.
I'll just jump in really quick because I had something I had advised, holding back to 2017, had a big old bucket of tokens from a project that ended up kind of going nowhere, and I was locked up. And unfortunately, when I sold at a pretty significant loss, but I was thankfully able to sell. The cost basis was at the time that they were issued. And I'm not a CPA, but I know my experience was it was a loss. And while it seems unfair, that's the way that they're setting the cost basis now. It's when it was issued. For me, that was what happened with my personal experience.
I got a quick question. When you say issued, do you mean issued in terms of you have access to those tokens, or do you mean issued?
Issuance of the term sheet.
Okay. Thank you for sharing.
But I got to stack a loss, so that was good. I took it positively.
All right. Well, thank you everybody for your time and attention. We're out of time. I want to be respectful of all the time that we've pulled from the TaxBit team. Make sure you follow them on Twitter at TaxBit or Instagram at We Are TaxBit, the blog. And remember, TaxBit is hiring. They are just super well funded. Recently expanded down over to Seattle. So check out their taxbit.com/careers. And definitely keep in touch. This has been really, really helpful. Hopefully we can have more TaxBit time in the near future. Thank you so much, Michelle, Aaron, and the community for joining us. And this is recorded, so I'll make sure it gets posted very shortly and share the link in the Slack channel.
Thanks, everybody. Take care.
Thank you.
Thanks for tuning in. This podcast is non-technical, fun, informative way to learn about money, Bitcoin, blockchains, crypto, and digital assets. This podcast is not financial advice, and your reactions are your total and complete responsibility, y'all. Now, thanks again, and enjoy the show.
What are you doing?
Stuck inside.